Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's October 19th. This will be our chart lesson for the day. And this is going to wrap it up for the week. No chart lessons on Fridays. We finally got some movement today. There's still not a ton of trades, I mean, there's more than what we've been having, but there's still not a lot of trades today. I count 1, 2, 3, 4, 5, 6 that standard type trades, and then there's a couple more that you could mark green, and there's probably a couple more in here you could mark green if if you wanted to argue the point. But um, so just still not a lot of trades. When I first came in, I was really just kind of looking at this possible channel here. But of course, when we shot right on through it here, then there's a couple of different things you want to consider. You want to consider, hey, are we going to make a measured move down like this first leg? And so that would be one way you'd look. And then I'd also just look to get a equal distance down. So you measure that down and then you copy your line and pull it down. Of course, we never got down there to either one of those targets. And that's another thing that you want to consider. Uh, if you don't make any of those targets, that means you're probably going to have a pretty good move back in the opposite direction, which you can see we did. We moved up from about 25.55 to uh, I'm sorry, 25 45 to 25.60. So that's about a 15-point move. That's a pretty good move. So, and a couple of these, if you'd have caught them, you'd have had a runner. So that's all good as well. But that was the two ways I was looking at it. In the end, it just looks like we had a little overshoot. And once we started going higher here, what you want to consider is that we're filling this gap. And people will say, I don't see any gap there. But what you got to understand, when I say filling the gap, I'm talking about on a daily chart. The daily chart won't open until 8:30 a.m. Central Standard Time, which is right here where this blue and white line is. And this line over here, actually right here, is where the regular market would have closed yesterday. So there would, if you went to a daily chart, if it closed here and opens here, well, then there's a gap in there. And usually the market will try to fill those gaps. And so once we started going higher, you had to assume that, hey, prices are probably, let me just back out where we can see the whole thing. Prices are trying to fill the gap from the previous day. And you can see here that we actually ended up, it looks like we've probably closed up slightly from yesterday, even after all that. And it didn't surprise me that we had a sell-off like this or that we rallied, because we just couldn't keep doing what we were doing. At some point, somebody's going to decide to either sell it or buy it. And you're not going to get a lot of heavy buying at all new prices. So you had to figure that at some point somebody's going to dump it and sell it. And that's what happened. Somebody started selling. People saw that, hey, it's a value, and the buyers come back in, and then we rallied all day. So this was not an easy day to find a clear channel that really helped you. So you had to go the shorter term stuff. I mean, for the most part, this channel did not help you. The big one, you really just had to use the shorter term stuff. And if you use that, you probably were okay. And that would have given you this one here. You really, originally I had it drawn off these two, and there probably is another shorter term one in there, but eventually I drew it off these highs and drug it down, and then you see it did fit up through there. So it didn't really help you, but this channel would have helped you on this one, the bigger channel, I should say, because we notice how we were underneath it and it's acting as kind of resistance, and we finally got through it. It comes back, it tests it again, it holds as support. That's generally going to be a good place to go long, and I'll talk about that trade when we get there. But yeah, this, it wasn't easy where you find a major channel or a trend for the day and you go with it. You really, in this area in here, you could trade this both ways, and it became long all the way up once we started this uptrend. But through here, you can see we're below the EMA, above, below, above, below. and then we finally got back above here and stayed there the rest of the day. So you could really trade this both ways until this bigger trend started up here. But let's back out a little bit, talk about the trades, and we'll wrap the week up. Um, First trade I see is this short right here. When I came in, the bias was still down at this point. And I was really thinking that, hey, we may be looking for a measured leg down from here. And it would have been nice if you catch one of these shorts in here on that. But there's a shorter term trend line right there. I'm going to go ahead and just take that off the chart. You had one coming up. You get a close outside, move to a new high. And it's tempting to go short right here. But that's a fairly big bar. And I'd probably wait on a higher or lower high, which comes here, but that's too bullish. And so you really don't get a good chance to enter that one. There's actually a failed second entry long right here. And you actually could make the argument for this one that, hey, it looks pretty good right there. It is off of this trend line and all. But you're just so far away from the EMA entering down here is what kind of bothered me about that one. There's a good chance it bounces. You could probably still make the argument for that one to be green. That's one of the ones I was talking about earlier. And really, since it's a trap, you could almost make the argument for it to be red. But the problem I have with it is it's right into these last couple of swings here. And it's by the time you enter, it's such a big bar. Let me see how many ticks that is. That's the, I don't know what that is. But that's the other thing is you have to consider how many ticks there are there. That is that's a 10-point bar. And if you put your stop above it and you enter below it, well, that's 12 ticks. Did I say point? 10 point is 10 tick. So you really can't enter there. You just can't enter that one unless you let it back up, and then you're not going to get it. So I'm not even going to mark it. I'm going to leave it like I originally had it. Even though there's a trap there, it's just such a huge bar. And, the thing is a lot of times the more risk you take, the bigger the reward. So there's a good chance that, hey, if this thing is going to make another leg down, that might be your only place to enter. It might be a good place to enter. So there's still that argument. I still kind of go back and forth about it. I tell you what, I'm going to leave it green. But I just don't think you could have got in it anyway, but I will leave it green. Because if you play by the rules, you're not going to get in that one within an 8-tick stop. The only way you could was to let it back up, and it doesn't back up enough to get you into one. But you might could have entered right there at the low, and then you probably would have scalped out and got away with it. But it's still pushing it. But anyway, that's enough about that trade. I think you get what I'm talking about there, with that huge bar being that close to these last two swings. Even though this is the low you're really concerned about over here, you still cannot ignore those last two swings right there. And you don't really know that you have this high, you don't know that you're going to get a high or low here yet either. So if you just come over to that point right there, that looks like a pretty good trade. So I could see arguing for that one. But once it bounces there, it makes a higher low, and then we run up, it makes a higher high, and then it pulls back, it makes a higher low. So I like that one for a possible entry. This is really your signal bar, but you could argue for this one, going long one tick above that, and your stop still has to go below this bar though. And so you have to have enough room there. If you don't have enough room, just like we talked about on this one over here, if you don't have enough room to put your stop in there properly, then you don't want to enter there. And then it's still a little bit aggressive too, entering there, because it's just a first entry. So But notice what happens. You push up, you try to go short once, you try to go short twice, and that is a new low. It's lower than that swing. So there's your failed second entry short. It does kind of bounce right off what your trend line there. Um, it's a failed second entry short. You're probably going to have some people trapped there. And all these other people that are short in here are probably going to exit if it goes higher. So I like that one, and that does turn out to be a really quick, nice move up. Um, at that point, I would look for, I'd measure it a couple different ways. I'd measure from here to here, and then look for a measured move there. And you can see we went a little further than that. Then I'd also measure it from here to here just in case it keeps going. And you can see we didn't quite get that one. So, but a lot of times when you get 3 swings like that instead of your 2 legs, your third swing will be about the size of your first swing. In that case, it didn't really match your first one or your first 2. But what it did was if you drew this trend line and drug it up, it turns down right off that trend line. So that would have been a great place to look for a possible, and look how far away we are from the EMA there. That's the kind of place I'm thinking about a short. And so I like that one. It's aggressive, but I like it. Fairly bearish bar. You're better off to wait on that lower high, which comes here, and a nice bearish bar. I would have liked it even better if it broke out the top side and turned down if it went right out the other side, but it doesn't. But I still don't have a problem with going short there because now you've got one leg down and you've got 2 clear swings in here to a new high, and you're making a lower high here, and I'd look for at least one more leg down equal to this one. But if your channel is right, which is at this point, it turns down right where you expect, we're probably coming back to here. And if you catch this one, you get a runner here, ride it all the way down. I mark this one green. I'm not crazy about it simply because it's right into that trend line, and if it's right, you could bounce there. But notice what's happening. You got a nice channel working down, and there's a failed second entry long right there, and then it tries to go long yet again, and now you've plus you had a little rally right there, so that's now a double test of that level. It's a failed second entry long with another lot with a long trap in there, because it looks like it's going to go lower again, and then it turns back up, and I'm sorry, it looks like it's going to go higher again where it turns back up, and then it turns and actually goes lower again. And so you might enter there. Again, you're better off to see if this is going to act as support and resistance. And even then, you're going to want a good setup. And notice what happens. It comes back, it tests that line, that midline once, tests it twice, gives you a bearish bar like going short there. That's another easy short. And it does come right off that possible flatter trend line as well. So, but in the end, you just get a break this one. You get one leg down, a little 2-legged correction, and then another measured move down, and you get a little trap, and it goes up again. I don't think you want to enter long down here. It's too risky. So wait on your reversal, and it comes right here. So notice you push. Look how quick and easy you go through that EMA. It tries to go lower once, tries to go lower twice. Makes a double bottom there basically, and it actually, you could treat it like a little failed break lower too. It's a fairly big bar, so and it's not a, it's still got a little stem up here, so you might let it break higher and drop a limit order, maybe a tick or 2 back into that or right at that high, just to get a little better entry from right into that high. It didn't matter any way you entered it, it takes off. And at this point, I'm figuring that this channel is probably in play, and that we're probably going to go back and try to fill the gap that you would see on your daily chart. So I'm thinking long at this point. So now you're just looking for a chance to get long that's reasonable. There is a new low there, first entry, pullback. So there's a failed second entry short, but look how bad we're going sideways. And I drew that trend line up there and pulled it down, hoping that maybe that's where we're coming back to. You didn't really need this though. You can take that off. It would have helped you up here, but you didn't really need it. You're just going sideways. You end up getting a failed break lower, and it bounces right off that midline. And so I like going long there. It's also a second entry. Notice the new high, pull back first entry. Actually, I take that back. It's not a second entry. The second entry was right there, but uh, you don't want to take that because it's just kind of going sideways, and you'd want to test that at least once more before you try to go short. So, but when it drops down, it's a failed break lower, fairly bullish bar. It's not perfect. But this is one where if you tried to use a limit order, you would have got left behind, and that's the danger of sometimes trying to be um, um, trying to be conservative and get a little better entry, you'll miss some of the best trades. So if you'd had a better, more bullish bar right here, I might have said add on here on this higher low because again it bounces right off the trend line, the support area across there, the EMA. So you got confluence from three different support areas there. You've got the same thing really right here. You get a little bit below it right here, so you may rule out that one, but you still got the trend line on the big, or what might be the midline, and then also this trend line by getting it off these higher swings up here. And like I said, there's another one working up through here. You can draw one off that swing, and it'll fit on this side as well. So there's another shorter term one in there, but it didn't really help you. It probably would have confused you more than it would have helped you, if anything. But at that point, you almost have to consider that, hey, this is not a two-tiered channel, and this was probably a big overshoot. And or I wouldn't say overshoot. This is a big break of the main trend line, and now we're probably going to try to make a new high. We're probably going to try to fill the overnight gap. So that's what I was thinking at that point. But this rockets on up. You actually get a failed second entry short right there. But now you're going long basically in the high of the day. And even though this looks like a pretty strong trend, I'm not ready to trade it like a strong trend yet. Although you could argue for that one to be green. I'll mark it green, but I think it's too aggressive to go long right there at that high with two matching highs. So if you just be patient, you'll get another opportunity. And guess what? It pushes a little higher, two legs back to the trend line again, the EMA, you get a bullish bar. There's your chance to go long on a little better entry. And of course it takes off then. So and that is a second entry. And that got you into the 3 o'clock hour. It continued on, but it actually did the same thing again here. This is like a repeat pattern of this down here. Draw your trend line across there. I mean, it looks a little different, but it's still the same thing. You're going sideways back to the trend line and drops down, sideways back to the trend line and drops down, and takes off again. And so yeah, we finally got some movement today. This feels like a really volatile day compared to what we have seen. And again, there's just not a real clear, hey, this is the channel you need to be trading, and it's there all day, and you just stay with it. It wasn't that kind of day. So if you struggled a little bit today, I mean, you shouldn't have really struggled to figure out we were headed higher. Right in here, yeah, I could see. But once we started up here, this is a clear uptrend, and you should have been able to get on board with that and say, hey, we're going higher. Or at least at that point, you would see that it was we're still back and forth above and below the EMA really till about right here. So at the very least, you should still be looking at this like a sideways market and just trying to use your shorter term stuff. So that's where people struggle that don't have a lot of experience. They have no idea what the market's doing, and they really just don't have the experience to be able to sit there and decipher it. But when you do this every day and you watch it over and over, as you get more experience, it gets easier. Trust me. I know that may not feel like it right now because it takes a while to get this down, but stay with it. It gets easier. It gets, I can just glance at it and get a good idea of what the day is like. And, as the day progresses, there's usually clues if it's going to change. And so anyway, I guess what I'm just trying to say is that if it was a hard day for you, don't let it bother you. Uh, it will get easier with more time and experience. So let's leave it at that. So I'm gonna wrap it up. That's gonna do it for this week. We'll be back again to do it Monday. But I'm out of here for the week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.